From the land grant University in Urbana-Champaign, Illinois. This is the Closing Market Report. It is the 6th day of March, 2026. I'm Extinction's Todd Gleason. Coming up, we'll talk about the commodity markets with Mike Zuzolo at globalcomresearch.com out of Atchison, Kansas. And Eric Snodgrass will join us from Nutrient Ag Solutions in Daggerable. Along the way, I'll remind you to stay with us for our Commodity Week program if you can for the whole of the hour. Otherwise, you'll hear a portion of that program. It was recorded at the All Day Ag Outlook during the Beef House event on Tuesday of this past week. That's March the 3rd. Our panelists for that day on the soybean panel were Chip Nellinger of Blue Reef Agri-Marketing, along with Ellen Dearden of Ag Review and Greg Johnson of Total Grain Marketing. Should be a great hour if you can stay with us. If not, it's up online right now, and many of these radio stations will carry Commodity Week over the weekend. So stay with us this afternoon as we start the program with the Closing Market Report right now.
Todd Gleason services are made available to WILL by University of Illinois Extension.
July corn for the day settled $4.71, 8 1/4 higher. December at 484.5, up 6.5. May beans up 21.5. The July 20.5 higher. They finished at 12.13. November at 11.46 3/4, up 10 1/4 cents. And soft red winter wheat up 33 at $6.16 3/4 cent. The hard red at 623.5, up 31. Both of those in the May contract. July futures there 635.5. up 30 cents for the day. Mike Zuzolo, globalcomresearch.com out of Atchison, Kansas, now joins us on this Friday to talk about a marketplace that has just been booming for the day. First, though, let me thank you for making the trip to the Beef House on Tuesday. You make the meeting so special. I really appreciate it that you came all the way in for the All Day Ag Outlook.
Todd, I appreciate you saying that, but I just have to say you and all the participants are just wonderful. And I kind of forget each year how special it is there, and to be able to sit at the table and talk to clients or even strangers and then meet, my colleagues up on the panel and catch up with everybody and see you. It was a great meeting. It always is, but it's just a great way to spend a day together. And I always kind of think of it as kind of like fellowship and getting together, and especially what looked to be a really lackluster 2026 about 3 weeks ago. Now we've got crude oil markets that are leading the commodities higher. And, all of a sudden the sun has broken through the clouds, it seems.
Yeah, well, so tell me about the market today. And I take it it's led by crude because that sucker has just picked up and taken off.
Yeah, it is. But I would also say that, as we talked about on Tuesday on the corn panel, when we saw each other, it's been about the crude oil and the dollar and the precious metals, and those three assets giving us an indication of whether the market, the investment, financial markets, commodity markets are inflationary in their mindset or deflationary / stagflationary, that the prices go up sharply and it's going to hurt and curtail demand. And that would be indicative of the dollar going into a safe haven and investors jumping into the dollar and buying it as a safe haven. We saw that throughout the week. And when we were together on Tuesday, we saw that type of price action where the dollar was sharply higher, the metal sharply lower, and that really took the upside potential away from the grains and the soybean complex. But then as we've gotten through the rest of this week, Friday was kind of a breakout day in terms of sentiment, I think, not just because of the Strait of Hormuz not opening up and more big countries shutting in their oil production, more countries like China shutting down and India shutting down their exports of gasoline and heating oil and crude oil to preserve their domestic supplies. But we also had a jobs report that was exceptionally negative in the market's eyes, and that really weakened the dollar. So all of a sudden you had a sharply higher crude market, sharply lower dollar market, and then the metals markets were able to find some support, and that inflationary bell kind of got rung. And I really would say that, along with some winter wheat weather still being out there, looming, kind of orbiting out there as a very supportive feature for the hard red wheat, really took hold on Friday. And 2023 levels in crude oil, contract highs in lead month soybeans, and 20 plus cent higher gains in the wheat. So that crude oil wheat relationship is very much intact. So now crude oil, it's going to give, but it's probably going to eventually take away depending on what happens with the geopolitics.
Yes, so the crude oil up more than $10 or thereabouts, above $90 a barrel at this point today. Another big gain. The U.S. dollar down, I don't know, 3600s or thereabout, 36 cents that is. And so I'm just wondering between those two, does that tell you that we'll have more sales? I mean, for instance, for corn, we're already on an extraordinary pace. Would that be the case for corn? And do you think soybeans will actually be marketed more likely, given the lower dollar, although soybeans just jumped in price?
Yeah, I would say two things. In the very short term, Friday and through next week, I think we'll probably see some additional short-term pressure, or even if the crude oil goes sharply higher with the dollar lower, we might not get that kind of a move initially in the corn and to a lesser degree the beans, because I do think there's some cash selling that started at the end of this week. I probably had more calls on Thursday night through Friday from clients that I've had in 6 months. Thankfully, we still have some old crop corn to let go of. We're done with old crop beans. But with that 30-cent rally in the hard red wheat market, I think this is where if you continue to keep that Strait of Hormuz closed, I think it was Goldman Sachs was estimating that between 7 and 11 million barrels a day of oil is not getting through to the world marketplace. If that continues, as I said it on my blog on Thursday night, I think the genie comes out of the bottle next week if we don't get this under control, because at some point it's probably going to be too late to create a market that allows fertilizer prices, diesel prices, and even the chemical prices to come back down. And they may, kind of bake in this price rally into our physical markets and our inputs for the corn. And so back when you and I started in agriculture media and agriculture commodities, the old mindset was if the raw material goes up, then the commodity needs to go up. So if all these inputs are going up, corn should be more valuable. And I do think we'll start talking about an acreage shift back into more beans if we don't get this thing under control.
Tell me about the 92,000 jobs that were lost for the month of February, what that means to our own economy. And then I've got a lot of other questions here, but let's start with the jobs loss and how you see that impacting the marketplace.
Yeah, this is one of those things where the market's not, I don't think, really looking at the situation, or until that jobs loss data came out, wasn't looking at the situation that the Fed could actually cut rates in 2026 because of higher crude oil prices. The market was kind of a binary, saying higher crude means inflation, means the Fed can't cut rates. I'm different because of the way the 70s and 80s were, and if you have a supply shock type inflation, that usually creates a recession, and you got to get ahead of that if you're the Federal Reserve. That jobs report, I think, woke the market up to the idea that, wow, bad jobs and high crude oil prices equals stagflation. The Fed's going to have to jump in here and do something about this, and I think that really pummeled the dollar. I'd love to see that dollar continue to go lower, because as we talked about in the outlook meeting, or at the ag outlook meeting there at the Beef House, President Trump's policy has been to weaken the dollar through tariffs, and now I think he wants to do it through the Federal Reserve by changing leadership and moving in a mindset that we want to keep weakening that dollar to improve that America First type mindset and policy that he's put forth.
Let's go back to the Middle East. The Strait of Hormuz shut down. Iran doesn't look like it's moving. And the president's saying, I'm only welcoming unconditional surrender. That feels like a long way apart before there could be a settlement in this situation.
Yeah, it does. I think that's a really good way to frame it, because I think it was Politico came out shortly before the close in the grains and said that the Pentagon, or some in Washington and the administration, were planning on months, not weeks, for this situation to continue. That probably helped give us these new highs at the end of the week, because it really does bake into the cake that the longer it goes, the harder it's going to be to unwrap. And it's going to be a situation where, even though we're not taking much offline as far as damaged production facilities or the supply chain getting damaged, it still takes a while to restart facilities, even if they're not damaged. So I think the clock really is ticking. That genie is going to come out of the bottle. I put it at next week. I was thinking, and said this at the Beef House, I didn't think we'd go above $80 in New York until next week if this was still going on, and then we head towards 100. The market's way ahead of that. They're getting way ahead of this because they're just so nervous, and they're putting as maximum pressure on the administration to get that Strait of Hormuz opened up.
Yeah, it was the Pentagon, and I think they were talking about September in that particular release. So interesting things. We'll have to continue to watch it. Anything before I let you go?
I would say this. I think that the corn market still has not woken up given the export demand. And I would say we still have ahead of us whether President Xi and President Trump meet. And all week long this week, I've seen more and more coming out of Asia that President Xi doesn't know how to handle having President Trump at a state visit, given the fact that he is a friend to Iran and the leader of Iran is gone. So if that doesn't happen, if that meeting between those two doesn't happen, after we get past the WASDE, after we get past the acreage report, does that open the downside up for the soybeans? So that's something to keep in mind.
Thank you much. I appreciate it.
Thanks, Todd.
Mike Zuzolo is at globalcomresearch.com out of Atchison, Kansas. Let's check out what's been happening in the global growing regions across the planet. Eric Snodgrass is here. He's with Nutrien Solutions and Agrable. Hi, Eric. Thanks for being with us. Where are you traveling to today?
I'm actually trying to drive across the state of Illinois, east to west, over to Carthage to talk with some growers this afternoon. But I'm going to be honest with you, I kind of wish my car had a sail on it because the amount of wind across the midsection of the state today out of the south is crazy. And it's bringing in all the warmth, but I can't seem to be able to drive in a straight line.
I felt that when I was coming into campus today. Just a big wind blowing. Tell me about that big wind, really, and what it brought to us earlier in the week, the kind of rainfall that came across the Midwest.
Yeah, I mean, we saw in some areas just a tremendous amount of rainfall. In fact, we went from talking about drought situation and parts of Illinois and Indiana, and now we've got the rivers are flooding. We've got saturated soils. I mean, I watched part of Arkansas, Southern Illinois, Tennessee, Kentucky, southern half of Indiana go from their soil moisture values in the lowest 2 percentile on March 1st. And now they're in the 90th percentile as of March 6th. So that was a lot of very, very heavy rain. And that's what we can do here in the Midwest. We can completely undo a winter drought or fall drought that lasted in such a short amount of time. So the question is it just going to keep raining and make more problems? And then what about the severe weather today?
And the answer is?
Yeah. So I'll be honest, there's a little part of me that's excited that I'm driving over to Western Illinois because I'm going to be inching closer and closer to where the risk for the severe weather is going to be. And so we're watching a huge area coming out of the plains toward the Midwest today. The Storm Prediction Center's been all over it all week. And there's the risk of kind of all of it: hail, straight line winds, and tornadoes. I'm just going to say this to everybody that's listening. We just need to be very weather aware over the next, let's call it 12 to 18 hours. Have multiple ways of accessing weather data. Weather.gov is the best. Make sure you have a good app for radar on your phone. Just stay in tune because the storms that are coming through this area are going to be potent. That doesn't mean all of you are going to get hit with bad weather. But last night we had a massive tornado in Oklahoma. And then this morning there was a report of fatalities. So I just don't want to come off alarmist, but I also want to make sure that everyone knows this is the time to be prepared.
All right. How much rain do you think we will get out of this system? And will it continue? Is it in a small band? Can we continue to lose some of this drought across the Midwest? And I'm really thinking about the western part of the Corn Belt.
Yeah. So the new drought monitor came out on Thursday. But remember, when we get it on Thursday, it has data available through Tuesday. When we were at the Beef House, it had just started raining, right? So that was the beginning of the rain. And right now, the drought monitor is still sitting at 75% coverage for the United States. And honestly, Todd, we are still in that epicenter in East Central Illinois where it's been so dry. Now, I anticipate that by the time we get into early April, that number could be down as low as 60%. And the main areas getting the upcoming rains are going to stretch from eastern Texas and eastern Oklahoma straight through the eastern Corn Belt, even into the northeast United States. And we live right in the middle of that. So I am anticipating more meaningful rainfall, possibly picking up another couple of inches with time. And to get that in March is huge, rather than getting it in April and May when it's going to really disrupt our spring planting. So there's good moisture return. It is going to eat away at the drought monitor, but not in western Texas, western Oklahoma, Colorado, western Kansas, or most of Nebraska. Eastern Nebraska, yes, but western, no. And that's where drought is probably going to linger through the month of March into early April.
Transition from La Nina to El Nino. We've been talking about it. Continuing still?
Not just continuing, Todd, but in my little nerd world that I live in, yesterday morning on the 5th, we got all new data that came out from one of our models called the European model. And I'm going to tell you something. It's not just calling for El Nino. This model is swinging for the fences, looking at temperatures by late summer across the equatorial Pacific, 2 to 2.5 degrees Celsius above average. Now, for people that don't know, they're like, okay, should I care? The answer is yes. That would actually classify, if the model's right, that would classify this event as a super Nino.
Oh,
The
no
last
way.
one of these we
Wait,
saw. Yeah.
little boy, little girl, and super?
Yes, there's
What? Oh,
this is just what we do. We come up with terms, and this is going to be a strong one. So strong El Nino conditions by summer going into fall. It's going to affect the hurricane season. It's going to affect next winter's precipitation. And as cold as we were this winter in the eastern half of the country, we will likely be just as mild next year if this El Nino does what typical El Ninos do. So big changes coming, and we've not seen changes like this in a while. And I'm just going to tell you something, Todd. Right now, every seasonal forecast for summer is buyer beware. I mentioned that on Tuesday at the All Day Ag Outlook. What I want to make sure that everyone understands is that every time we forecast big El Nino events, the models want to make it very, very wet in summer in the midsection of North America. And I'm just going to tell you, some folks will get it. You'll get your summer thunderstorms. Others will miss. There will be problems. There always is every season. Just don't rest on El Nino being your best friend this summer.
On that cautionary note, I will not ask you if we can rest on the impact of Super Nino in South America before we go today. Thank you much. And hey, have fun in Carthage. It's just a beautiful small town. I've been there a couple of times.
Yeah.
Nestled between Macomb and Keokuk and south of Nauvoo. Great place to be.
It is. I'm looking forward to it.
That, of course, is Eric Snodgrass. He's with Nutrient Ag Solutions and Agrable. Joined us here on this Friday edition of the Closing Market Report from Illinois Public Media. It's public radio for the farming world. If you can stay with us for the whole of the hour, you'll hear all of our Commodity Week program recorded at the Beef House earlier in the week. If not, it's up on our website already at willag.org, and many of these radio stations will carry it over the weekend.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Today's program is taken from the All Day Ag Outlook, our morning soybean panel, including Ellen Dearden from Ag Review in Morton, Illinois, along with Chip Nellinger, who also is in Morton. He's with Blue Reef Agri-Marketing, and Greg Johnson of TGM. That's Total Grain Marketing in Champaign, Illinois. Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world, online on demand anytime you'd like to listen at willag.org. That's WILLAG.org. Now, let's go to the Beef House in Covington, Indiana on Tuesday, March the 3rd, and hear what the folks on the soybean panel had to say. I asked Ellen Dearden to lay out her thoughts first.
I'm surprised, like a lot of other folks, that the rally that came out of the mid-January lows has gone as far as it has. I see a lot of hope from Chinese business built into this market, and I'm not so sure that we're going to see Chinese business actually come about. So I'm really thinking that this is a good time period to be cleaning out of old crop beans and probably getting well along on new crop sales. I do believe that with the price of fertilizers probably and the availability given the Middle East situation, that we may end up seeing a few more beans being planted than what the report came out of the Ag Forum suggested.
Chip Nellinger, your opening statements?
Yeah, I very much agree with what Ellen said. I think, to put in perspective, a couple things hit me. Number one, if China, that's a big if they buy another 8 million metric tons, that still puts them slightly under the previous 2 years. The USDA has $1.65 billion projected for exports. You have to assume that there is already a fair amount of Chinese business in there. Yes, we're increasing the crush and the renewable diesel. That's going to be a supportive factor, but they already have increased the crush estimates as well. And so if they do buy 8 million more tons, I'm not so sure that increases the exports, because it kind of messes with the free market. You're looking at a crop size in Brazil of at least 6.5 billion bushels, maybe higher. For reference, we raise 4.2 billion bushels. So if China is forced to make a non-economic decision to buy more of our beans, I'm not sure it actually increases exports. In the end result, we're going to lose some out the back door to Brazil. And it's hard for me to believe that we won't have an effect of that massive supply for quite a while. That does not mean they can't run another 50, 60, 80 cents higher, because the funds don't sometimes factor in the fundamentals like that. But in the end, I think the massive crop in Brazil is something that's going to hang over the market for a while.
And Greg Johnson.
Well, every year we have a series of known factors and unknown factors, and throughout the course of the year, the unknowns become known. I think this year we have a lot more unknowns than what I can ever remember in a long time. And so more unknowns means more price volatility. I think we'll have a wider range of bean prices this year. Normally we have a $1.80 swing from high to low. That's the average. I think we'll see $2 plus from high to low this year. Some of the known factors is Brazil. Everybody's mentioned that. Joanna's mentioned that. Chip's mentioned that. They grow 6.5 billion bushels. Just for comparison, the U.S. is number 2 at 4.3, and Argentina's a distant third at 1.3. So Brazil is here for the long run. Here's the other thing that hasn't been mentioned. Agriculture accounts for 5.5% of the U.S. GDP. Agriculture accounts for 30% of Brazil's GDP. They are very, very committed to agriculture in Brazil. I don't see that changing.
That's Greg Johnson. He's with TGM, TotalGrainMarketing.com, was joined on stage during the All Day Ag Outlook Tuesday, March the 3rd at the Beef House in Covington, Indiana, by Chip Nellinger of Blue Reef Agri-Marketing and Ellen Dearden of Ag Review. If you can stay with us for the rest of the hour, you'll hear all of that program. If not, it's up online right now at willag.org. That's willag.org. I'm University of Illinois Extension's Todd Gleason. More Commodity Week in a moment on our home station. Otherwise, many of these radio stations will carry it over the weekend.